So it's hard to get your hands around this. We had claims earlier this morning at 200,000, sub 200K. But just in a couple of industries, finance and tech, the layoffs keep piling up. Wells Fargo cutting more than 500 jobs in its mortgage unit, adding to the thousands of cuts from last year. In big tech, the Washington Post reporting in the last 24 hours that Meta plans to reduce and reorganize thousands of workers. Sonali Basak joins us now here in New York alongside Mandeep Singh. Mandeep, first to you, the story we're familiar with now in tech, more cuts.
Well, and it's not surprising because tech companies have high fixed costs. I mean, if you keep aside the Uber, Lyft, and the ride-sharing companies, most of the times they have a very high operating leverage because, you know, in times when revenue growth is strong, the fixed cost model works quite well. The problem is when the revenue growth starts to taper down, which is the case, you know, with all the consumer tech companies, the fixed costs become a problem because it shows up in the margin degradation, and that's why you see another round of cuts possibly at Meta, and I don't think it's good for, you know, the morale or just retaining talent. So I do see as a problem when companies have multiple round of cuts.
Mandeep, given the excess hiring we saw in the pandemic, are we closer to the beginning of this or the end?
Well, so I would say we probably have a few quarters to go, simply because in the case of Meta, it looks like a structural problem. We saw that, you know, with Apple changing its policies around privacy, that hurt their ad pricing. Now they're tinkering with a subscription model, you know, charging creators for using the tools on the platform. And those structural issues take time to resolve. I mean, maybe Meta may not be able to get to that 20-25% top line growth level again. And that's when they have to think about how they can right-size the costs, and that's what they're doing here.
Sonali, in tech, it's thousands, tens of thousands. It's far more incremental with these banks. What are you seeing, Sonali?
It's drip by drip, John, and remember, some of this is because of slowing growth, slowing business at many of these firms. You saw that over at Goldman Sachs be part of the case after years of headcount increases. But remember, some of this you have to recognize is also strategy shifts as some of the market fundamentally changes. When you're looking at Wells Fargo, and particularly, that's certainly the case, because not only are the mortgage markets really hammered here, you also have this secular move from the mortgage markets away from the big banks and lending into other places instead. So when they're cutting jobs here, it's not just about boom and bust. It is about changes in the environment itself. The question here then becomes thousands last year, hundreds this year. Who else is yet to come? The mortgage market is a very clear space where there's a lot of pain. You saw those cuts at JP Morgan as well, but do those cuts become deeper elsewhere? It's a very close thing to watch after watching Bank of America announce hundreds as well after holding on for dear life for the last couple of weeks and trying to preserve those jobs.